G'day gold traders, welcome to the first gold video for 2021. Appreciate your time. Hopefully it'll be around about 30 minutes, 35 minutes if I do everything as I've practiced. Alright, before we get started, yes, I've got some certificates, yes, I've got some licenses, but it means nothing. It doesn't make me a better trader than anyone else. But one thing it does, it means that I'm qualified to give advice, okay? Before you ever consider taking anyone's advice, make sure that they're qualified to give you the advice. That's my number one best advice to anyone. So let's begin. General advice, only general advice. It's just a typical disclaimer on all my videos. Until I get to know you and know your individual financial circumstances, I cannot recommend you to go out and buy gold right now. I may say buy gold now, but unless I know you personally, talk to me. I'm real. Search my name through the internet, you'll find me everywhere. I'm everywhere at the moment. Those of you that have watched last year's gold class will know all about the gold versus paper. It's true, folks. The names, they change. The faces change, but their game doesn't, and that is to devalue your dollars, devalue your purchasing power. The US printing press, it's pretty simple. You know, for the last 50 years, it's been going parabolic, okay? That's the US printing press, there's a Euro printing press, and there's a Japanese printing press, all going parabolic. Gold versus paper, the key ingredients to M1, M2 and M3. Pause the video now and have a read of it. I'm not going to read it out to you. It's pretty simple. M3 is what you want. Big bucks here in the M3. That's what we want. There's the M3 for the Euro. You can see it's going up even more than the M1 and M2. Japan's M3 is a lot more than M1 and M2 combined. That's recently now what's happened in the Euro. 2020 seen the spike up, and that's the spike up that we're seeing in our yen. Alright, well, we'll look at it in fine detail as best as we can. With every single country around the world, they're all doing the same. Printing crazy right now. In 2006, the US stopped the M3 data sharing. If you can find an M3 data for free, let me know. I can't. You do have to pay for them. But that's roughly what it looked like in 2008. You know, 1 trillion to 2 trillion, 2 trillion to 3 trillion, 3 trillion to 4. We're nearly up around 7.5, 8 trillion dollars now that have been printed. So what we did in all of 2000 and 2012 to save the global economy, we did that in 6 months for COVID-19. So that's really what the USA's M2 looks like. It's going parabolic, okay? It's in a real steep 60, 70 degree J-curve. No M3, remember. If you can find an M3 chart, let me know. Up close. That's what 2020 was, the worst ever in the printing press. Is there more to come? Will 2021 be even worse than 2020? We don't know. But I can tell you this. Use history as a guide, and it looks like we're going to see more and more stimulus. We've got Jay Powell talking about increasing the stimulus, talks about interest rates being, you know, no way that they're going to go up until at least 2023, 2024. He's, you know, trying to give certainty to the markets. What comes after a trillion? Really interesting, isn't it? A quadrillion. So who's going to be the first country to reach quadrillion in debt? It's huge. It's just amazing, the numbers, guys. Think about it. As a young kid, million was all you heard. Then once you get into your 20s and 30s, you hear of the billionaires. And in the last 20 years, billions means nothing now. It's all in trillions. So in another 20, 30 years from now, trillions will mean nothing, and it'll be all in the quadrillions. It's just the way that money expansion is going. You know the story of the US dollar. It's no longer as powerful as it once was. It's a good little chart. It's the same one from July last year's class that I did. It just shows you a visual, detailed chart on everything that goes wrong with every crisis. All they do is just keep devaluing the dollar. Okay, pretty simple. So the dollar is at its end life expectancy. That's a timeline of every single global currency over the last 2,000 years. Interesting to note is the last 4 or 5 currencies have lasted around 100 years. 17th, 18th century Netherlands, 18th, 19th century the Spanish dollars, and then returned back to the British pound and the gold standard of the British Empire, the gold sovereigns, 19th century to the 20th century. And then we got rid of the gold and silver in 1933. The Bretton Woods kicked in, and we've seen what? The birth of the US dollar and the printing presses of paper. So 2033, that'd be the maximum expectancy of the US dollar. So it's approaching its end times. 12, 13 years to go. That's it. We're looking at the central bank's balance sheets right now. What's worth looking at is everyone's saying that the central bank's balance sheets and all of our printing press started up again because of COVID. September 2019, the printing press started up again. Yep, a huge 5 months before COVID. 5 months before COVID. There was a big pickup in volatility in the VIX, and I predicted that movement very easy. And it started in 2019. Okay, by January, it just went into overdrive. What COVID-19 has done is got every country on the same page at the same time. Printing press galore. Okay, it's increasing whatever they're trying to do. We can't do anything about it. You can't fight the tide. You can't swim against the tide. You're best off to just pick the best weapon or the best life raft and hop on board it. Inflation versus deflation. You'd think with all that money printing and, you know, the $7 trillion in central banks' balance sheets now, we've got a situation. We're going to see inflation. Inflation is going to go rampant. Okay, it's going to go crazy. Hyperinflation cycle, like Argentina, Zimbabwe, Germany in the pre-war years. Okay, even Zimbabwe back in the early 2000s. You've had Venezuela in the last couple of years. Hyperinflation cycles. That happens when you devalue your dollar that much that people lose faith in the dollar. There's also deflation. The 1980s seen the boom of Japan, and since that boom in Japan in the 1980s, we've just seen nothing but deflation and more deflation and more deflation in Japan. Regardless of how much money they've thrown at their economy, deflation remains in Japan. So let's look at some deflation pressures and understand what causes deflation, because everyone knows what happens with inflation. Everyone's been told by the media, expect inflation, expect inflation. All of this money printing, expect inflation, expect inflation. So I like to do the opposite to what the media says. So maybe we're seeing deflation. Let's look at the consumer spending by age. Very important to understand the cycle of humans. We are cyclical creatures. We keep doing the same thing over and over. Doesn't matter if you're born in the 1600s, 1700s, 1800s, 1900s, or the year 2000s. Our average peak spending occurs around 46-year-old. So 39 to 54 is a big blanket area there where we peak in our spending. But after we hit our 50s, that's it. We stop spending, or we even start decreasing our assets, selling off our assets. Okay, or you just hold on to your assets until 65, depending on what you do. Depending on what country you live in, it wouldn't matter. Everyone peaks around 46. Every country. It's a cycle. So with that in mind, let's look at the world's populations and understand what is happening from that 46-year-old onwards. Here is Japan. Very, very important to understand. I'm using Japan as a guide to deflation, guys. This is all about understanding that all the world's money printing hasn't helped Japan. So why is all the world's money printing going to help the Eurozone and help America? Okay, the money has been printed to fix a hole somewhere. If they don't fix that hole, then it's just like, filling up a bucket of water and watching it leak. Okay, you've got to fix a problem. Don't just keep throwing money onto the fire. It's just keeping the fuel going and burning. So let's look at this. This is the peak in Japan right now. The 40, 45, 50-year-olds, right in peak. The last baby boomers of Japan are right here. That was the second world baby boomers in 65, 70. So that caused the 1980 peaks when they went through the peak spending period. Okay, so what you got to understand is as the demographics of a country move through that peak spending period, it is the most highest point for GDP, highest, most prosperous time for that country. And with Japan, it's very unfortunate. There is no peak in any age bracket below. It's about as good as it ever gets, 40, 45 right now. So if they have not fixed Japan's economy by now, unfortunately, they're not going to fix it over the next 10, 20, 30, 40 years. Unless sometime in the next 10 years, Japan all of a sudden has a big baby boom again, then 40 years from now onwards, then on, you'd see a good cycle of return to high growth again. Population in Japan, it's very top heavy, and they reckon by 2025 we should be in a decline. 2025 onwards, 2030, 2050s, right through to 2100. Population in Japan is on a decline over the next few years. And it's all because of this. No serious birth rate, a massive size overpopulation over the next 20 years. As all these 50-year-olds and 70-year-olds get into 90 and 65, they will die. With no baby boom behind it, population in that country is on a decline. That's deflation, folks. Retiring people, selling assets, that's deflation. No children following through to accumulate them assets that the retirees are trying to sell, that's deflation. It's coming to every country around the world in a different way. I'm just giving you Japan as an example. Here is the 1990s. It was quite healthy. We had 15 and 20-year-olds and 10-year-olds quite big, equal with most 50-year-olds. It was peaking the 40, 45-year-olds. That's what peaked Japan. 87, 88, 89, the best years. Then 2014 comes, starts getting very small bottom end. 2025, even more smaller bottom end. And you can see that by 2050, the 75, 80-year-olds will be the most dominant age group in Japan. That's going to be huge. Okay, so for the next 20, 30 years, as that last band of 50-year-olds go through to death. That's the cycle. We've got no new baby boom underneath coming through. Okay, and that's typical in every country around the world. This is what the average demographics of the world is right now. Okay, this is guided by the United Nations. Okay, so in the 1950s it was very simple. 1950 we had a beautiful looking pyramid where we had a massive baby boom. Okay, just remember in 1950 it was 5 years after all the soldiers returned from World War II. So think about this. It's 1945. All them soldiers have just returned. They make love to their wives, and some of them get pregnant. And that created a baby boom. So from 1945, add 60 years, 2005, add 65 years for people retiring, 2010. So you've got that 2008 was the rough period where that last baby boomers hit peak and started retiring. Okay, so that was the top in the markets in 2008. A lot of things happened with that financial crisis, all to do with demographics and spending waves and asset classes. In 2015, the average world population is now obviously increasing its life expectancy. Over 80-year-old is quite expected, 90, even to 100. Okay, but again, the baby generation underneath isn't quite sustainable. It's getting thinner. It's a red alert, guys. Red alert. By 2100, we expect it to be looking like a skyscraper, a high-rise tower. You're going to have people living well and truly past 90. You'll even have people going 100, 110. And that 80-year-old bracket, which was death for everybody, there'll be quite a few million people living past 80s into 90s. But again, look at it. 20-year-olds, 30-year-olds, 10-year-olds, 5-year-olds, nothing. We'll never ever see it. Population of the world will be controlled. Okay? So I think the population of the world has maxed. It has peaked. And so has prices that are caused by the demographics of population. When we look at the, and this is an old chart from 2018, by the way. So when we look at the 15 and 64-year-old population growth, you can see that we've had good growth over the last 70 years, from 1950 to 2020. Then from 2020 onwards, we've got decrease. Okay, there is a decrease. They're no longer growing. And that's just not in Japan, but it's the OECD countries, China, Brazil, and Russia. Okay, so this is just a pretty good gauge to see how the world's population is going and how they expect it to go into 2050. Debt, 210 trillion. Well, that was in 2018. It's probably about 500 trillion now, so get ready. GDP of the world top G8 countries, 76 trillion. Hasn't really grown much, might be about 85 trillion now. So the period of our black line is the interest rate. Okay, the Fed's fund rate. It's sitting at 0. Okay. That's another topic altogether, which we'll get into in a minute. So as you can see, the peak in demographics, the peak in the 80s, with all the baby boomers spending, caused the top in interest rates. Yes, that's right. And as each wave of 40, 50-year-olds retire, as the next wave comes through and 40, 50-year-olds, they all spend and then retire, they've never reached the maximum population from baby boomers number 2 after the Second World War. Very interesting. It's all to do with demographics. Even interest rates are controlled by demographics. And that chart clearly shows you. So what have they got planned for 2021? How will 2021 be for you? I can't tell you what's happening in your own country, how it's going to roll out, but as a global economy, we are heading for a great reset. What that great reset means exactly is open to your own discretion. Lots of people are saying that there's going to be a debt reset. Government debt is going to be abolished, so no government will be in debt no more. Central banks will wipe that government debt off. Central banks will then be in debt. Who knows what's going to happen? How can central banks be in debt? Well, central banks are a private enterprise, so be careful, okay? Someone owns them. They have to agree to wipe that debt off. So the World Economic Forum is meeting in May 2021 at Davos. You can go onto the World Economic Forum and read in detail what their plan is for the Great Reset. Now, there's even talk about student loans. If you've got a debt with the government, then that part of the debt could be wiped out. Unfortunately, I get asked a lot of times, what about my property? What about my mortgage on my house? Will that be wiped? That'd be good. No, that's a private enterprise. That is to do privately between ABC Bank with you or XYZ Bank and you. Okay, it's got nothing to do with the government. So don't expect private debt to be wiped. It will be only government debt that is being held by the central banks. That's what I believe. So let's look at how the government and central banks are looking right now. Have a look at the banking crisis that's coming. We can see that something's going to happen again. All right, pretty simple. You look down at the lows that we're in, there's always something that happens. Something that happens. We don't know exactly what's going to happen in the next 2 days, 2 months, 6 months, but something big is going to happen down here. Okay, record lows and about to go negative. This is the LIBOR rates, okay, the London Bank overnight rates, okay. all the forward rates agreements. Okay, they're going to get rid of the LIBOR and they're going to use the FRA, IOS. It doesn't matter what you're using. Just imagine this: bank to banks lend to each other in a special market, and that market is drying up. The liquidity is getting worse. Spreads are widening, but at the same time, it's dropping. Okay, because of interest rates and obviously the central banks trying to intervene to keep that liquidity there. Something's going to give. Something's going to happen. We had 2008, it started off as a financial crisis, then went into an economic crisis. This time, we've got an economic crisis heading into a financial crisis. So get ready. The banking crisis. Everyone's really quiet. There's not many people talking about it. In fact, this is a statement from JP Morgan last week. Not many people know. Some people do know. JP Morgan reported, okay, and everyone was happy. Yep, they met their earnings per share. They had their dividend payment, and the guidance was a little tiny bit bleak, not confident, okay? But in their PowerPoint presentation, I picked up on this information, and it is simply JP Morgan Bank are preparing for negative interest rates. Yep, negative interest rates. JP Morgan warns that there's trouble ahead in the months. Okay, and this is in their earnings report last week. Anyone can look at it. JP Morgan, latest earnings report. Go and have a look at it. You'll get a PDF copy, and you can look at everything that they're planning ahead for the next 6 to 12 months, their projections. So, dropping below zero, okay? Get ready. All right, imagine the whole market cap of the US equities market and then times it by US GDP. Well, that's what this market chart is. Okay, so 1929, the big 1930s depression, okay, massive, that was number one. Then 1971, 1972, 73, Nixon took us off to the gold standard and the printing press again. Another big hiccup through to 1980s. Okay, number three, you all know that one, the dot-com disaster, okay, the tech wreck crash. Okay, we all know number four, quite recently, the 2008 GFC. What's going to be number five? We're going to look back soon, guys. It could be next week, could be next month, could even be September this year, or maybe even next year, but it's coming. Something is going to trigger number five. I'm just telling you, be ready. It is at 200%. So if you take all the market cap of these companies right now, it's 200% of US GDP. That's unheard of. Crazy. Absolutely crazy. All right, so how will gold react? Well, like we said, it's sitting somewhere. It could probably react around 7 grand in true value. That's what the right side is. It's just a log to keep with the US dollar gold price if it was to be at 200% GDP. All right. Number five is now overdue. I'm not going to tell you that's going to happen next week. I'm not going to tell you that it's going to happen next month. I'm sharing with you demographics that are telling you that something's going to happen. And something that's going to happen is more likely deflation because the global population is telling us that. They're printing money, which should be causing inflation. But, hey, hasn't happened in Japan in the last 30, 40 years. It ain't happening in any country in the last 10 years, 12 years. What's going to say that inflation is going to happen in the next 6 months, 12 months? With all this more money printing. They're not fixing the hole in the bucket. Remember that story. All right, so get ready. Negative interest rates are coming, not just to the USA, but to many G20 countries around the world. Okay, we are at zero, and you know this week's a big week. Jay Powell will do his quarterly economic review, and he'll do his testimonial. So listen to that. It's a big one on the calendar this week. Keep an eye out. Of course, he's going to keep saying, no, there's no chance of negative interest rates. No, there's no chance of negative interest rates. Every single politician or any central bank, when he says no, 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 3 no's in a row, I mean, next time he says it, it's a yes. Okay? Look at it. Every time they say that something won't happen, it always happens. So how will gold react to negative rates? What a great question. I'm glad you asked. Well, this great reset, it's still a mystery what is going to happen, okay? Only by using history as a guide can we be better prepared? What is possible for the future? So here's our gold price at the moment. It's pretty simple. We're still in a corrective downtrend. Okay, we have had the rally up. We are in a downtrend, but it's not a massive steep downtrend. It looks like a correction. Okay, a typical correction. Look at this one here. Hopefully you can see my cursor. You can see this here, a period of about 6 months where we went sideways and then took off. This one's been a little bit more than 6 months. It's around now 8 months, 9 months now. But again, take out the old lows of 1760, even go down to 1700, 1720, and then possibly get ready to go. So gold's looking very ready to take off again. We'll look at that in more detail and share some really good mathematics for gold in the next few slides. But just as an example, don't go out and rush out and buy electronic gold right now. Okay, it's in a correction stage. If you can get a hold of some physical gold, brilliant. Japan went into negative interest rates in 2016. Okay, there's a chart. Everyone should know Japanese interest rates are negative. Euro, negative. We've got a situation where negative interest rates are not too new, but they are still new. So we need to look at Japan and see what happened to gold in Japan, okay, to compare apples with apples. If we've got any idea of what's going to happen when USA puts that country into negative rates, what's going to happen? Well, we can see by a year later, we took off. Gold nearly doubled from 140,000 yen to 220,000 yen. It's a pretty impressive move, almost doubled in 3 years. Okay, it is serious. We are very serious when it comes to investing, and not only just investing, but protecting our wealth against deflation or inflation. But it's a good time to stop for a little bit of humour. Think about this. It's, Gene Wilder, eh? It's the most popular meme generator picture going around. Let me get this straight. They want to ban paper money to prevent us from being able to withdraw our money. So then they can implement negative interest rates and charges for keeping that money in the bank. Isn't that interesting? Get rid of paper, get rid of cash, have electronic money, so you've got to keep it in the bank as electronic money, and therefore they can charge a negative interest rate on it. Get ready. That's deflation. That's deflation for you. So global interest rates are coming, and they are going to be negative. I have no doubt that all the information we can see based on demographics and the populations, the spending spree that all the central banks are on, regardless of this great reset, we're going to see negative rates in the G8 countries at least. So buy some gold before it does decide to double. Okay, history says, based on Japan, gold doubles when we go into negative rates. When is a good time to buy gold? Well, the seasonal cycles for gold, they don't work 100% every year, but as a guide, remember, use history as a guide only. The best times to buy gold is always in June, July, okay? Electronic money, remember, leverage up. Don't try and buy gold while it's still in a downtrend. You're going to get very hurt, okay? Unless you've got a very large account and a small position and you can hold gold for all the way to $1,400, go for it. If you're a scalper and you're trading on the 5-minute charts and 1 hour chart, keep buying your gold and selling it. Keep doing that. But if you're a weekly chart trader on gold and you're waiting for the next bottom to form, wait for the bottom to form. Miss out on that 5-10%. Wait for it to break the trend down and then buy it. And if it hasn't happened by June, July this year, just wait for another week or two. Hopefully by August, it will take off. There is a 15-year pattern and a 40-year pattern. It's pretty close. It has been wanting to head off a little bit earlier each year. So instead of waiting till August for it to break the trend and head up, it's going in July. Be careful. Cycles are a guide only. I've used cycles all my life, and my last big prediction in 2010, you would have seen this if you watched the last gold video from July last year. This was my last big call on gold. $2,000 for gold in the next 2 to 3 years. From 2010 to 2012, from $1,000 to $2,000, and it did it. It did it perfectly along the J curve. Okay, it was very easy to predict based on some simple mathematics. I'll share with you those exact same mathematics that I used. Larry Elliston and I have been working together over the last 10-15 years, understanding cycles. Larry was a king at it. He was the best in the world. Larry died in 2017. We've got a situation now that his last cycle chart is still valid and been working like a treat over the last 5 years. Go watch the last gold video and you'll see evidence of that 3-month sideways, and within 4 days it dropped. Look at the videos and the charts I'm about to share you, and you can see that gold bottomed, okay, in 2018, September. The top and bottoms again, even this bottom here for 2019 on the 31st of the 12th, 2019. They're small waves compared to what's happening in 2021 to 2022. Okay, just be aware the cycle chart did expect gold to have bottomed at Christmas time 2020. That clearly hasn't happened. We are forming a bit of a double bottom, or taking stop losses now below that double bottom. If that happens, great. We're only 2 months out on Larry's cycle. That means that the cycle for the top will probably be 2 months later. Okay, if it's 4 months late, this cycle here, the top cycle will be around 4 months late as well. So it's to treat it as a guide only, but there's some big moves coming in 21, 22 for gold. Here's the chart predicting 4 months sideways, and it breaks out downwards. Then our chart predicted the bottom in the red square, and it did. Okay, and the new uptrend began. Okay, we predicted the bottom formation after it's finally made its bottom now. The typical measurements were easy to go to 1900, and it did. Okay, we've gone through to 2000, and if you know what happened July last year, the video was, the prediction was to come down. Okay, we wanted it to come down. So you can see this yellow circle area, 2019, we expected it to rally up, and it did, right on Christmas 2019, as he predicted. All right, so the cycle's been pretty good. The projection was we'd stop around 2000 and come back down to 1650, 1700 and take off again, and then onwards and upwards to 2900. Okay, it's a typical way that we move the 3 waves up. Here's the current short-term gold. It's a nice up close view of our expanding gold bull. Okay, as we're heading up, the volatility is increasing, not decreasing. So you can see that the yellow trend line should hold if we hold around 1680, 1700. If for some reason 1680, 1700 does not hold, then that could be trouble for gold, and we could fall back down to the 1400s and let time catch up on the green trend line again. I don't think that's going to happen. Okay, there's a lot of information out there that tells me something's ready to break and gold is ready to take off again. There's a lot of things heading for a gold bull. This is the 2022 US prediction, my roadmap that I used and shared last year. It still remains unchanged. Not picture perfect, but it's pretty close to. Okay, so another month or two and we could be down at the 1700s and it's time to buy. I'm not going to say that that's true. Gold could take off next week and we break the downtrend. But until it does break this downtrend, do not buy any electronic gold off a weekly chart until you see a good weekly candle bull above that red line. Okay, it might not come down and touch our yellow trend line. We don't know for sure. So wait for the momentum to appear and then take off and get aggressive. Buy physical when you can. Bitcoin bubble. This is just to share you a typical 323.6 Fibonacci extension. Okay, there is mathematics in everything. Why? Who cares? It just exists. Fibonacci exists in everything, from shells to our fingers to cyclones to galaxies and our whole universe. share markets run on Fibonacci as well. So 323.6 Fib, Bitcoin hit it this morning. Okay, 57,500, bang on 323.6. So it's just, you can see what happens. Remember this old saying, it's a very good saying. In bull markets, upside surprises. In bear markets, downside surprises. But so often you'll see 323.6 be touched, and like a magnet, we start dropping from that number. Gold, my biggest and most bullish view for gold in US prediction history ever. Could you imagine gold getting to $5,000? If gold does a Bitcoin and goes to 323.6, well, that's possible. Now, if I say that's only going to go to 3,000 and it ends up going to 5,000, brilliant. But let's just work on the fact that it should go through typical seasonal cycles and get to about 3 grand over the next year or two. If it does decide to do a Bitcoin, thank you very much. It will go to 323.6 Fib. Okay? But it might stop at the 1.618, 200% Fib zone. If it does, then only 3,000 will be the target. So I can't guarantee anything, but based on mathematics, gold could possibly get to 5,000. Thank you very much for your time. Hope you've enjoyed our first video for 2021. Any questions, please, you know who I am, message me, get to know me. Or those of you that do know me already, message me. I'm always happy to help. Stay safe, everyone, and always remember, buy gold when you can next afford to do so.